You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. What's going on maybe in some ags or some metals or perhaps some FX or who knows, rates, equities. You never know what's going to happen on the old show. So you got to tune in every week, listeners. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Pleased to have so many of you joining us out there these days. If you're one of the legion of on-demand listeners, all we ask is that you continue to rate and review the show. It really does help new folks continue to discover the content. Of course, if you want to go above and beyond, you want to join us for exclusive content like our Pro Q&As on Tuesdays, our Options Oddity sessions on Fridays. Actually moved the Pro Q&A to Friday this week, so you can get a double dose of Pro content tomorrow, as well as live for this show, everything else we do throughout the week, and a whole bunch more. Then you know where to go. theoptionsinsider.com/pro is the place to go. And normally I would say we are being joined right now in the FTSE Russell and CME Group hot seats by our old friend, the once future and indeed present Dr. Vix. But as is usual with him, he is having some, shall we say, technical difficulties. So you know what we're going to do, listeners? We're going to try to get him on the old-fashioned way, listeners. Let's see if that ends up working out. You know, the old magic of the technology we know as telephone. Listeners, let's see if we can get him on through that. All right. Once in future, Dr. Vix, can you hear us, sir?
Yes.
There he is. The magic of technology. Somehow the pipes between here and the hinterlands just don't want to seem to make the handshake.
Well, I'm not in the hinterlands. I'm in Indiana. So
oh, even farther. Maybe that's what it is.
Let's blame the somebody cut the string on the rope between our two tin cans, and I'm going to blame the same person that's blowing up gas pipelines.
There you go. You know, it's Putin lurking around out there in his sub. He took some time out of that to go and snip the line between Chicago and your university down there. You know, like the Kelley School of Business, they got to pay their internet bill, I guess.
I know. My goodness gracious. I don't know what's going on with this thing. This was the third time I've tried to use my audio today, and it's not been cooperative. So something's going to get thrown through the window.
You have to go chat with the IT folks over there as we keep on rolling right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything moving to the light side, aka the upside, and to the dark side over there at CME Group this week. And as we have seen a few times of late, our data is, shall we say, a little bit biased, a little bit skewed in one direction, listeners. A lot of red on the old chart this week. You guys can see this for yourselves if you follow CME Group on Twitter. If you follow us on Twitter, we always tweet it out right before showtime. You can see for yourself just how much red is on the screen. I think we can make a light side top 5, but just barely. That said, Mr. Rhoads, you are our guest, so I will still give you that pride of place, that choice. Where should we begin our journey this week, sir?
Oh, let's just get the top 4 upside. There's a fifth one. There's a little bitty bar in there. So yeah, let's go upside.
Let's squeeze
do light
in.
Side because the rest of this show is going to be dark side.
It's going to be a lot of darkness. So let's get to the light first. And you're right. The number 5 on our light side this week, very itty bitty. It is Rough Rice, up a whopping 0.09%. But you know what? It qualifies. And that's literally it for the green. The cutoff is right there. Everything else is red on the screen below it, listeners. Number 4 above it, we have RBOB up 1.32%. So that's respectable, I suppose. Number 3, Palladium off to the metals, 1.32% as well. So we got a tie for 3/4. So far we've been to the ags, then out to energy, then over to metals. Again, RBOB, Palladium, and Rough Rice, not exactly huge options players out there. Number 2, Class 3 milk up 1.96%. There is a little bit more options paper going up out there in dairy. Not Eurodollar numbers or E-mini, but it's something. So we could potentially hang our hat out there. And the number 1 light side mover this week, a product we really haven't broken down much before on the show because it is a relatively newer addition to the offerings over there. It is the old 3-month SOFR, up 3.78%. It was number 4 in the other direction last week, off 4.89%. That doesn't sound familiar. It's because it's effectively the new replacement for Eurodollar. That's going to be the hot thing going on over there. Of course, LIBOR going the way of the dodo next June, I believe, is when all that comes to a close. So they're already rotating into its replacement, which is SOFR, aka the Secured Overnight Financing Rate. And that's been an interesting product that has been growing quite a bit. So if you've been wondering maybe why Eurodollars isn't on the movers and shakers that much anymore, it's because SOFR kind of taking its place over there these days and putting up some numbers there as well. So we could certainly hang our hats out there. Now, to the dark side we go. Man, we could do a whole bunch of dark side on the show this week. We'll just limit ourselves to a bottom 5, listeners. Number 5, we got soybean oil off 5.28%. It was number 5 in the other direction, the light side, last week, up 3.19%. Number 4, we've got lumber off 5.95%. It was number 3 in the same direction last week, off 5.14%. So you've probably been seeing the headlines about lumber really taking it on the chin, rising rates, curtailing a lot of housing demand. So, of course, there goes lumber. Did have a hurricane this week, so that usually can maybe give a bit of a jolt to lumber, but that's usually a bit of a lagging lagging indicator there. And lumber, this still off this week, off 5.95%. Number 3, nat gas, off 6.34%. It was number 1 in the other direction. Actually, it's number 1 in the same direction last week, off 9.84%. So far, we already have 2 of our 3 frequent offenders there on the dark side. Number 2, it's oats. Oats has been moving a bit of late. Unfortunately, you know the song and dance by now. Handful of options contracts, if that, on the tape this week. Oats off 6.89%. It was number 2 in the other direction last week, up 5.33%. And the number 1 dark side mover this week, I bet you didn't see this one coming. Lean hogs, listeners, off 11.32%. So lean hogs getting slaughtered, pun intended, out there this week. So, wow, slaughterhouse there on the dark side. As we keep on rolling, we do have the once and future and now present Dr. Vix joining us. And equities are, shall we say, in a wee bit of tumult right now. So I think we're going to hang our hats there first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful world of equities. Maybe not as wonderful today. Most of the major equity markets taking it firmly on the chin out there today. Of course, if you want to play along with the show, listeners, go on over to cmegroup.com/TWIFO. Go into that asset class drop down. You're going to scroll down about 4 slots to equity indexes. Then we're going to hang out in the product family US Index E-mini. And then we're going to hang out from there. We can pick our poison, S&P 500, Russell 2000, whatever floats our boat out there this week. Listen, we'll start in the Russell 2000, see where our journey takes us from there. Of course, before we do that, let me set the table, set the vol table for Mr. Rhoads so he could sit down and eat. RVX, the VIX of the Russell 2000, coming into the start of the show, almost a 38, 37.92, up nearly 6 handles this week, 5.8 handles on the week. VIX itself north of the 30 handle, listeners, almost a 33, 32.87 when we kicked off the show, up a little over 5 points, about 5.2 points. VVIX, the vol of vol, looking back at that pandemic levels we saw for quite some time out there, triple digits again, 110 almost, up over 20 and a quarter points from where it was this time last week. So volatility itself is getting volatile, listeners out there. Vol Q, the at-the-money vol of the NASDAQ, 36, about 36 and a half. That's up almost 4 points, about 3.84 points on the week. So that means that VIX to RVX, so the large cap to small cap vol spread, pretty much exactly a 5, about 5.05. That's about a little over half a point, about 0.6 of a point wider than it was last week. So that spread continues to widen out, which is interesting. And the old VIX to vol Q at about a 3.6. That's about almost 1.4 points tighter. So that NASDAQ to S&P vol spread has actually tightened up a little bit this week, which is also interesting. All right, Mr. Rhoads, the table has been set. The floor is yours, sir. What is lighting up your tape out there in the land of equities and indeed volatility, sir?
Well, equities, everybody continues to keep an eye on VIX and thinking that we've got a top 40 for there to be a bottom in the equity market. I feel like I'm a lone voice that says I don't think that's going to happen. I've been kind of nervous lately, thinking I might have a little egg on my face if we do get a really violent push down. But you'd think with the amount of things that have been going on in the world that if it was going to happen, it would have happened. You know what I mean? So I'm holding. I'm sticking with that prediction, and I'll probably, a lot of people make their careers with one really good call. I might be ruining my career by sticking by that one, and I might be using an anchoring bias and sticking with that one as well. I think the drop in vol Q that we've seen relative to VIX, that's kind of interesting if you think about it, because we are getting ready to enter into earnings season. And typically around earnings season, which for the majority of vol Q is a couple of weeks out, but during earnings season, we often see that spread widen out in anticipation. I have been doing some work and I'm putting together a fourth quarter forecast because tomorrow's the end of the quarter. And, small cap stocks and tech stocks tend to do particularly well in the fourth quarter, at least historically. So maybe that's where the tightening of vol Q versus VIX is coming from. I would expect RVX and VIX to tighten a bit in time as well. And then finally, I think last time I was on, we were scratching our heads talking about VVIX being at such low levels. It's kind of interesting. I said one of the things that would cause me to start to be concerned again is VVIX at higher levels. And lo and behold, that is exactly where we are right now.
Yes, getting back to the north of triple digits level that we hung out in for the better part of 2 years during that pandemic range, and finally broke through it to the dark side this year, and now starting to get back up the other way. I know when we were talking about this the last time you and I were chatting about, aggressive sell-offs in equities was, of course, back in June, the last time we were flirting with these levels. I remember at that time you were looking at your indicators and you thought you were pretty comfortable that we had sold off pretty much to the nadir and that you were kind of getting back in on equities. Of course, in the near term, that worked out pretty well. Now that we're flirting around back at these levels, are you still pretty confident we're going to hang out here for a little bit and maybe north?
I'm still confident we're going to hang out here and pretty north. I actually think we're going to have a pretty, not an exceptional, but I think we're going to have a pretty decent fourth quarter when it's all said and done.
Interesting. The optimism.
Let's put it this way. I think we'll finish the year. The fourth quarter, I think equities will be higher on the quarter. Now that doesn't mean 20% higher and we end up not having an awful year, but I think we're a lot closer to the bottom than I know I'm in the minority thinking that maybe it'd be easier just going along with the crowd, but I just can't bring myself to do that.
Can't do it. You can't do it, sir, out there. It'll be interesting when we get to our question of the week a little bit later, how you're voting in that one versus where our audience is voting. It'll be really interesting to see. Are you folks buying in here? We'll find out in a little bit, listeners. First, let's go out to all things small cap. 1669 coming into the start of this segment, listeners. Man, we are a long way away from 2000. Doesn't seem like that long ago we were hanging out, flirting with that 2000 level. Russell 2000 at 2000 has a certain magic to it, has a certain resonance to it that 1669 lacks. But nevertheless, that is where we are this week, off about a full percent just since Monday's session. Of course, if you go back longer, I don't have it in front of me here, but it is off quite a bit. Looks like we're off nearly 2%, about 1.75% since last Thursday's show. So interesting times. What's lighting it up out there? Decent paper, all things considered, out there in the rut this week. Like any given equity, we're seeing about a quarter of the paper going up in the contract that's going out tomorrow. Maybe just because. Let's see. What is the big dog this week? The big dog is actually a little bit farther out. It's the 15.5 put. I said we're at a 16.69 right now. The 15.5 put is the volume leader out here in small caps this week. That has a whopping 4 days to go. And that all traded, looks like all of that on Wednesday. So one big day for the 15.5 puts, mostly opening. Let's see. Looking at the skew, seems like, it's hard to tell really what was going on out there with those puts. Then we have also 16.5 puts going up out here in the week 3 October contract. Those were pretty active all week long. A couple hundred going up today, a couple hundred on Monday, more scattered throughout the week. Looks like opening pretty much throughout the week out there as well. So intriguing stuff here for small caps. I don't know if you guys like some small delta calls. Not seeing a ton of those out there right now for obvious reasons. Of course, if you want to count these 17 halves that go out tomorrow, those are technically small delta right now. They're going out tomorrow, and they're nearly 100 handles out of the money. So those are pretty active actually throughout the week as well. Monday and Wednesday were the big days for those, opening on both days as well out there. So I take it back. There were some small delta calls. They're just going out tomorrow. So intriguing near-dated paper. Were some folks swinging for the fences and buying those? Were they probably overriding? I'm going to probably lean towards overriding. If they were betting on a rally, alas, it did not come to pass out there, and those calls are still open right now. So it looks like if they were scooping those, not exactly feeling the joy. By the way, feeling the vol right now. That contract going out tomorrow is hanging out at nearly a 50 vol. Let's go a little bit farther out where the numbers make a little bit more sense, listeners. Let's go out, dare I say it, 15 days. Let's go out that far. That's about a 38 vol in small caps right now. 37.75. That's up 4 points this week. So like we mentioned with RVX, things are getting frothy out there. That's actually almost exactly where RVX is right now. RVX is at a 37.92 and the 37.78 in this contract. The October contract goes out in 15 days. Skew-wise, it puts 9.3% bid last week, 9.7% bid this week, and 8.4% cheap on the calls, 7.6% cheap this week. So intriguing stuff. Before we roll out of equities, let me look really quickly at the old E-mini as well, because obviously this is a rock'em sock'em week for the equities. How much paper going up in the E-minis? Almost 3.5 million contracts right now. And all those folks who've been blasting away at puts, listeners, these are the kind of weeks, so that gets a little bit more challenging out there. Not to say they aren't still doing it. There are still 26,000 of the 3320 puts going out in about 5 minutes. Pretty much 13,000 yesterday and 13,000 today. So a couple of big prints in those. Also, the 3360 puts are pretty active with about 25,000 of those. So if past is prologue, those were all opening. So those are probably opening sales. So they are still up to their old tactics, listeners, just perhaps not quite as much. They're getting overshadowed by, dare I say it, more relevant paper right now. By the way, we're at a 3661 coming into this segment here. So it's off 48 handles on the week. If we dial the needle all the way back to last week's show, let's see if I can find the S&P 500 listeners. So many names. Here it is. S&P 500 off 2.14% from our end of a show last week, listeners. So obviously turning a wee bit to the old dark side yet again. And it's the 3,600 puts that are leading the dance out here this week. Let me just scroll down really quickly because there's a lot of paper to look at, listeners. Make sure I'm not missing any crazy prints. No, it's the 3,600 puts going out in a day that are leading the dance. Nearly 90,000 contracts. So to put that in perspective, that's more than silver. That's more than, most of these names we're going to talk about. You can take silver and class 3 milk and RBOB and palladium and lean hogs and oats, certainly. Add them all together. Lumber, definitely. They do like 3 contracts. Add all those together, and that's not going to be just as much paper as just these 3,600 puts that are going out tomorrow. And they were pretty active. The big day for those was Tuesday. 48,000 going up on Tuesday. Ever so slightly biased towards the opening. Today, 15, almost 16,000. Yesterday, about 14,000. And about 10,000 on Monday. It looks like the rest of the week was mostly closing. We don't know, obviously, about today's paper. So as we continue to threaten this 3,600 strike, listeners, and then get close and then rebound and all this back and forth, not surprising that we're seeing this very important psychological level really dominating the tape. And then behind it, because I guess they can't help themselves. Also, the 3220 puts went up 56,000 times this week, listeners. Again, garbage puts going out tomorrow. 56,000 of them, 32,000 on Wednesday, 24,000 today. So again, we need to almost reconfigure these scans just to kick these nonsense puts to the curb because there are so many of them. Mr. Rhoads, anything catching your eye out here in the paper in either small caps or the old E-mini this week, sir?
Well, in the small cap space, that in the work that I've been doing, the fourth quarter is always a really good quarter for small caps. And I was kind of hoping, I was scrolling through the skew of the multitudes of options that we have available now. And I was really hoping to, because we've on this program, an old friend of ours, Sean Smith, used to bring up that sometimes the volatility for the Russell 2000 was being driven by call buying. So I was hoping to find some of those, and I didn't. So I thought maybe there would be at least a little bit of long-dated bullishness, but I assume I can search long and hard, and it's going to be very difficult for me to find any significant bullish trades in the equity space these days.
Yeah, unless you count blasting away at garbage puts in the E-mini. That happens pretty much every day. We do have some bullishness in our chat. Looks like Option God says he's buying into small caps at these levels, so he likes them here. There's one voice. We got a few other people agreeing with him there. So we got a few bulls starting to dip their toes. Are you dipping your toes in, listeners? We got that question of the week right now. We'll get to that in a little bit on the show here, listeners. Are you folks starting to buy in? Are you have some conviction? Are you waiting for darker times ahead? We shall find out as we keep on rolling. Out of the equities, Mr. Rhoads, you are our guest. I will allow you to choose where we alight next, sir. What complex is lighting up your tape?
Let's go to the metals for just a second, even though they didn't show up on the top.
Metals
or the bottom.
For just a second. I think we can make that happen, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's head on into the shiny, the lustrous world of metals. Get into that drop down, pop out of equities, go down a few more slots to metals. Then we're probably going to hang out in precious, but I guess it's up to our guest, Mr. Rhoads. which metals are on your radar this week, sir?
Really gold. I just want to see if anybody's, that's just a market that people use when the whole world's going to hell. So just want to see what's going on there.
Gold right now, listeners, 1667, up about 12 handles or about 0.75% on the week. So it is moving up, maybe not quite the aggressive pop you would hope for, especially after a year where I think it's fairly charitable to say gold has underperformed. A lot of people out there who are gold bugs or were relying on gold for their diversification this year may be using stronger language to describe gold's performance this year, but I'm just going to say it underperformed. And right now it seems like it kind of is underperforming again. I mean, 12 handle, 1667. Is this what you got gold in your back pocket for? I'm guessing probably not. In terms of performance on the week, let's see if I could find our friend gold here, listeners, in the just tsunami. There I can see silver. Silver is off 4.47%. So tsunami of names here, listeners. I cannot. There's too many. It's just too many. I'll have our producers dig in, see if they could find gold for me and put it here because there's just too many names in the dark side this week, listeners. There are barely 5 that are green. The rest are all red, and they're all squished really, really tightly together here in our data. You can see that graph for yourselves if you are so inclined. Let's get on out to the gold. Mr. Rhoads, has there been any research lighting up your tape? Anything catching your eye in the world of the shiny stuff this week, sir?
No, and that's really why I wanted to look at the option activity because in as much as going wrong in the world these days, you would think that people would be using gold as some sort of a safe haven, and they're not. But when you look at the TWIFO page that we look at the options on, if you start to look at the skew of the options for basically everything beyond 2022, if you look at 2023, the call implied volatility is higher than the put implied volatility across the board. Leading up to the end of this year, the put implied volatility is more expensive than the call implied volatility. So is something, I almost feel like this is a Y2K situation. Is there something that everybody's expecting in early 2023 that we don't have our eye on quite yet? That's why I wanted to bring gold up. Because that skew can tell a story sometimes. And the skew, it's just very unusual how it flips when you get to 2023 from what it looks like in 2022.
Well, while you were talking, I did manage to find gold. It is off 1.08% since our show last week. So is that what you want in an environment where small caps and the E-mini are all off more than 2%? You want gold also off? That gets back to what's driving the gold bugs crazy right now, right?
Mm-hmm. And there's just a lot of head scratching going on. Where even the flight to what is the flight considered flight safety, they're not benefiting either. There's nowhere to hide, Mark. There's nowhere to hide.
The old adage, we've said it before many times, especially on this show, when it all goes to hell, correlation goes to 1. And I guess gold is testing out that theory this week as well. Everyone who's been long gold this year, you have my condolences. It has unfortunately not worked out. We've said it before. Also on this show, the only contractually guaranteed inverse correlation is a put in your back pocket at the end of the day, listeners. So, fixed income not delivering for you this year. Gold not delivering for you this year. Certainly crypto not delivering for you this year. So if you were looking for those asset classes to be some sort of diversification tool for your equity portfolio, alas, they have not delivered. Let's get into what gold is delivering this week. Let's see if we can find out some answers to this mystery out here. Almost 200,000 contracts exactly. 199,974 contracts on the tape this week. And of that nearly 200,000 contracts, 40% exactly going up in the November contract that looks like about 27 days to go here. That contract also hanging out at about a 1667 right now. That's where that future is hanging out. What is gold vol right now, you might be wondering? It's a little bit frothier than usual, 1762, up about half a point. That may not sound very high when we're talking small caps pushing a 40 and everything else, but for gold, that's fairly juicy. Now, if past is prologue, gold vol can hold a bid for a hot minute and then it just implodes. But we'll see, given what's going on out here in the rest of the marketplace, if maybe gold can maintain a little bit of juice for the foreseeable future. In terms of skew out here in this same November contract, the puts last week, 3.4% bid. This week, 6% bid. So what little skew there is out here, listeners, is once again biased to the downside. There's no upside concern or love out here at all. The calls 0.8 of a point cheap, so they're effectively flat, listeners. And this week they are 1.1% cheap. So they're effectively flat. And even the put bid, 6% is not much. So those are pretty close to flat as well. So we have a mostly flat skew with a little bit of a bump to the put side, which again is maybe not what you're hoping for. What Russell was alluding to, if you're a gold bull, you want a little bit more of a bias than that. If you go a little bit farther out, you got to go all the way out to June and July of next year. Then you're starting to see a 7-8% premium to the calls. So maybe that's what you're holding out hope for, but you got to go a ways out to even find that. So usually gold can be relied upon for a decent bid to the calls when things are getting hectic, getting hairy, but looks like maybe the gold bugs are just spent. They're like, you know what? This thing has just beaten the hell out of us for the entirety of this year. But we're done. We tried bidding up the calls all throughout the year. It has not worked, and now we're just out of bullets. I could certainly see that. In terms of the big dog out here this week, what was the most active contract? We have the 1760 call. So there are calls trading. And actually, I take it back. They were slightly edged out. There was about 5,022 of those. They were slightly edged out by the D's 1,500 puts, doing 5,247 this week. Almost all of that today. 3,061 today, 1,469 on Monday. The little bit left scattered throughout the week. Closing on Monday, opening throughout the rest of the week. Obviously, we don't know what was up with today's paper. So some action on the 1,500s. Also looks like the 1,600 puts are pretty active in December this week. Might have been a bit of a roll down. Actually, no, there's closing on both. So it looks like maybe someone was just closing both 1,600s and 1,500s for similar size, close to 1,400 each on Monday. We saw about 2,000 of the 1,600 puts trading on Wednesday as well. That was opening. And then the rest kind of scattered throughout the week. But then let's go back to our most active month here, which is November out here. And those 1760 calls did about a little over 5,000 this week. So there are some calls trading. Let's see if we can find out what's up there. 3,000 going up on Monday, most of that opening. So someone was opening on the 1760s on Monday. 1,600 going up on Wednesday, mostly closing. So maybe they took some of that off a couple of days later. Not much trading the rest of the week. So just those 2 days. We also saw 4,400, the 1,700s going up. The big day for those was actually Wednesday. 3,071 on Wednesday. So if they were closing on the 1760s on Wednesday and then maybe opening it, it lines up almost 1 by 2. So they could have been rolling down to the 1700. But if you're doing that 1 by 2, that's interesting. Then the rest of the week, not much going on. So interesting stuff here. I'm trying to look for any other. Usually with the metals listeners, you can always count on a few interesting and or aberrant upside prints, some crazy flies. Oh, here we go. 2,400s in Jan we're trading this week. 2,000 times, 2,008 times to be precise, all on Wednesday, all opening. No funky fly, no spread, no nothing else with this. Just 2,400s in Jan. Mr. Rhoads, how's that sound? There you go. There's your call print. 2,400s.
Yeah, there's the trade. That's the one where pushing everything up, I guess.
That's the needle in the haystack we were looking for.
Just to backtrack a little bit, and I'm always a completely open book with respect to what I'm doing in my accounts and all that other kind of stuff. For a long time, I held gold in both of my daughters' college accounts. And the idea was at some point, and of course, I'm getting pushback from the smarter person in my house who says, why do we own this in those accounts? Because at some point, before they go to college, I think we're going to see a bout of inflation and this will pay off. Well, it didn't really pay off, and it's not in the account anymore, and it will not go back into the account.
You were right about the inflation. Unfortunately, gold didn't hold up its end of the bargain, sir.
Yep, that's a good lesson there. Is you can be completely right on your macro outlook, but it doesn't necessarily mean it's going to transfer into what you think it's going to do in the market. So,
well, intriguing stuff. Maybe that's you picking up 2,000 of the 2,400 just for a little bit back pocket trade, sir, for Jan of next year. Get a little
I'm not doing that because I've been told I like being married, and I've been told that I should not own gold ever.
I like your wife's granularity. She gets down to the nitty gritty of the portfolio. I do not want this particular metal in my portfolio, and here's why. I like that. That's a good conversation to have with your significant other. So.
Yeah.
She seems well versed. I like that. As we keep on rolling, sir, what other complexes are lighting up your tape this week, sir?
I have one in the back of my mind, but you're not going to like it, so I'm going to let you pick.
Are you going to say rates? You want to go to rates? I can go to rates with you if you want.
I wasn't going to say rates.
Oh,
I was going to say currencies, but you guys did it last week as well. So
we have done a few FX. So I'll let you choose right now. You want to go to rates or you want to go to FX? Two of my favorites.
Let's do it. Let's do FX just because it's been in the news so much.
All right, to FX we go, listeners.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, everyone. Pop on out of that drop down, get out of metals, and you're going to go up 2 slots to foreign exchange. Then we're going to hang out in the majors. That's, of course, your Euro USD, your Pound USD, your Yen USD, all that fun over there. Mr. Rhoads, I was joking on the show last week that prior to the last month and change, I can probably count on one hand the number of times we've actually had call to discuss FX on TWIFO over the last couple of years. And then now all of a sudden it's coming on the show every week. That in and of itself should tell you something, Mr. Rhoads.
Yeah, and I'm certain that I have never talked with you about it before. What I do, part of my prep is I listen to the previous week, so I kind of have an idea of what's going on. And I didn't even realize we had the ability to talk about FX until I listened to last week.
You thought that button was broken. We don't go there. We don't go to the FX button. We do have an FX drop. It hasn't really gotten a lot of use except for the last month or so. Now we dusted it off and brought it back on the show. But you're right. We have all these crazy things. Last week, we have the Bank of Japan, stepping in, making some historic action there with the yen. Of course, we have the euro for a while flirting with parity. Now we have the pound flirting with parity. It's pretty much a half price sale if you go to England right now, Mr. Rhoads. So which currencies are lighting up your tape this week?
Well, I looked at the pound. There's just not a whole lot of option activity going on there. So I guess we just have to stick with the euro because just due to activity.
Yeah, pound right now, listeners, it's having a decent week for the pound, 42,000 contracts. So it's not nothing, but it's not going to equal what we're seeing out there in the old Euro USD, which is closing in on 100,000, about 86,000 contracts out there. So we will hang out there right now. That Euro USD back below parity, listeners, 0.98. So again, if you're heading to Europe anytime soon from America, it's bargain hunting season out there right now. In terms of, again, almost 100,000 contracts on the tape, about exactly a quarter of that going up in, let's see, what do we got? In the October contract that has about 8 days to go. So near dated FX paper, kind of trading like an equity. That's interesting. I don't see that too often. FX is usually a little bit more quiet, a little bit more staid, complex. You don't see a lot of high gamma near dated paper going up, but that's what we're seeing this week. So maybe we'll make an exception to our rules and go out in this contract that has about almost 8 days to go. So it's more than a week. So it's something to sink our teeth into. What is the vol out here? You might be wondering in this contract. It's a 1530. It's up nearly 2.7 points. That's a big move for FX vol listeners. FX vol doesn't really do much. And so to see it moving nearly 3 points in a week, that's a heck of a lot. In terms of skew, 4.3% rich were the puts. Last week, 7.3% bid. This week, and the calls, 2.4% cheap. Last week, 4.5% cheap. This week, so we were looking for a bit of a bias in gold. It seems like we found it here in FX instead. Puts are bid, calls are offered out here. So folks are fading this spread to the dark side here. In terms of the interest, the action, it was the 0.95 puts. Again, if you're not watching FX on a regular basis, some of these strike prices could be a little bit funky. Obviously, these are ratios. These are spreads, listeners. You're talking about the U.S. dollar versus, in this case, the euro. So it's always going to be some sort of ratio that we're looking at, and that's what the strike prices are. In this case, we're talking the 0.95 puts, so a little bit out of the money puts here, going up 2,300 times this week. The big day was Monday, about 1,200 on Monday, and then the rest kind of scattered throughout the week, mostly opening on Monday. It looks like it might have been a bit of a vertical. The 0.95, 0.97 vertical went up 1,200 times on Monday, opening on both, it looks like. So maybe a little bit of a downside put spread. I could certainly see some interest in something like that. Also, action out here, let's see. Also, action in the 0.97 puts, again, mostly because of that put spread that went up on Monday. They went up a total of about 2,000 times this week, including about 1,200 on Monday. So again, lining up with that kind of vertical action. And also saw the par puts, the one even puts, doing about 1,800 contracts this week. Again, the big day for those was Monday. So Monday was where a lot of the action was, mostly closing on those. So I suppose as we broke through that par strike, folks getting the heck out of Dodge on that. And then right behind that, we have 1,600 of the 0.96 puts. So you got a nice hefty put strip dominating the tape out here in Euro USD this week. 1,600 of the 0.96 puts. Again, the action was Monday, almost 1,100 going up on Monday, 500 on Tuesday, and then not much going up the rest of the week. Those were closing as well. So interesting. Opening on the 0.95 and 0.97 puts, closing on the par and 0.96 puts. So kind of interesting where we're opening and closing out there this week. Let's look really quickly, see any other interesting prints. Going out in about a day, we have the 0.9725. Great strikes out here. 1,240 of those puts going up out here today as well. And we also have, again, funky strikes. We've got the expiring in about 15 days out here in October, the 0.9975 call. So there are some calls on the docket this week, listeners, going up 1,200 times. They only traded once. That was on Wednesday. 1,200 times, all opening, and that was it. So someone opening for a decent size on the 0.9975 calls out here, listeners. So intriguing stuff. Let me go a little bit farther out. Actually, you know what? It seems like I missed one pretty hefty one. Actually, I missed a couple. Go farther out. Again, that's what's kind of surprised me. So much near-dated paper, listeners. It kind of threw me off my game. I'm used to going farther out in FX. And if I had done that, I would have seen that the pars going out here in December, the one calls, traded nearly 3,000 contracts this week. That they did 2,911, 2,600 of that on Tuesday. So a different day, which is interesting. Most of that opening. And then even further beyond that, we have the 0.98 calls in March, next March, doing a whopping 6,357 contracts. So that's a pretty active contract. They went up 3,300 times on Monday, all opening, and 3,000 times on Tuesday, opening again. Looks like it might have been a bit of a roll down because you have the 1.02 calls going up 3,000 times, closing on Monday as well. So someone may be rolling down from the 1.02. Again, these strikes are so interesting. 1.02 calls down to the 0.98s and taking off 1,500 on Tuesday. And maybe so that in that case, they would have been doing it 1 by 2, which is kind of interesting. But again, 6,300 of the 0.98 calls going up this week in March and 4,500 of the 1.02 calls going up. Seems like a bit of a roll down there in March. All right, Mr. Rhoads. That's a lot of living out here in the Euro USD. Anything catching your eye in that paper, sir?
Well, that let's call it par. That par call is kind of interesting, and the timing on it, and where we're looking toward the end of the year. It's December option, but it's December 9th, so it doesn't really incorporate the last month of the year. You got to assume if you're thinking about playing a reversal in this, you might be more comfortable buying calls as opposed to buying the futures or buying the currency, because it could always get a lot worse before it gets better. So I could see trying to get, if you're trying to play the euro going back above parity, I think options are definitely going to be the way that you would go about doing that. I thought maybe we would see a little call skew farther out, but or higher call skew relative to the put skew. Kind of like what I was talking about with the metal, and we're just not seeing that. I thought those two things, or talking about gold, I thought those two things might match up, where currency stability will lead to maybe stability around the world. I don't know. It's never about currencies until it is, and goodness knows it's about currencies right now.
That's what our guest said recently on the show. They said FX doesn't matter until it does, and then it's the only thing that matters. I thought that was a great quote. Yep. And but yes, we're kind of in that environment right now. We're also in the environment where you can throw out all the old correlations, all the old charts. None of them hold anymore right now. This is a crazy new year we're all living in. As we keep on rolling, we mentioned one of our frequent offenders was on the docket again this week. also making a lot of headlines. Who's tapping that pipeline out there? Who's sabotaging us? Let's head on out into energy next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's get on out into the energy. Pop out of that FX, drop down. We're going to go up 2 slots to energy. Then we're going to hang out in nat gas this week. Coming into showtime, 672 is where we're hanging out. So I think we had Carly Gunner on the Pro Q&A not too long ago, and she was talking about if things got below 7 for nat gas, she was going to be a little bit concerned about the near-term downside. And we are hanging out below that now, off about 27 cents on the week. Of course, you go back to our last show, off 6 and about 1/3%. So nat gas feeling some dark side in spite of the fact that someone's messing with that pipeline. Who's up to it? We don't know. But intriguing stuff. You know what else is also interesting? All this action out here in nat gas, price action, skullduggery with the pipeline, sabotage, all sorts of fun stuff. Usually that translates to a little bit of volume. This week, not much. I mean, it's still decent. It's 250,000 contracts, 250,000 contracts. Nothing to sneeze at, but for nat gas, we usually expect to see over 400,000 this kind of week, and a very active week, we've seen it threaten 1 million. So not quite there this week, which is interesting, given all the headlines and action and Sturm und Drang around all things nat gas this week. Not translating into a ton of paper, which is kind of interesting. And what paper is going up out here this week is going up firmly about almost 30% of it is going up in the November contract that has about 27 days to go. No weeklies out here. So that's kind of the most near data paper you can get right now. So hard to get that high gamma weekly play out here. And we got, like I said, about 30% of the paper going up out there this week. What is the vol in nat gas right now? It's flirting with 100, listeners. It is 97.75, up a full point this week. And in terms of skew, last week the puts 4% cheap. This week the puts about 5% cheap. And then in terms of the calls, 7.3% bid. Last week, 6.1% bid. This week, so coming in on the calls this week as well. So calls coming in a little bit, the puts getting a little bit more extreme from a bid perspective, or I should say an offer perspective. And in terms of the action, what was leading the dance out here this week, listeners, it was the 5 even puts. How long have we been talking about mostly calls on this for pretty much all year, listeners? It's been the 7 calls and 8 calls, 9 calls, 10 calls, even above. We've seen higher strike calls, 15 calls, crazy things going up here. This is the first week in a while where we've seen puts really leading the dance out here, and it's certainly understandable. It's the 5 puts going out in the front month here, doing 7,770 contracts. The big day for those actually today, 4,400 going up today, 1,100 on Monday and Tuesday, back and forth opening to closing there, and then about 1,000 on Wednesday, slightly opening there. So the 5 even puts. What do you think, listeners? Can we get to 5 in nat gas by the end of the month? Certainly an intriguing prospect. Follow right behind it, though. We still have some calls trading it up. In this case, it was 6,500 of the 8 even calls. Again, the big day is today. Today's the day for nat gas. 2,800 today, 2,300 on Wednesday, 9,900 on Tuesday, and about 500 on Monday. So opening throughout most of the week except for Monday. So there are some calls to be found. It's not a huge ton of them, listeners. Let's look at also seeing 5,600 of the 6 puts trading. Again, the big day today, 2,000. 1,400 to 1,000 going up every other day the rest of the week, all opening throughout the rest of the week. That makes more sense. We're obviously getting within spitting distance of that 6 strike, so makes sense. Some folks will be lining up some 6 puts here. And then behind it, we also have the 5 half puts. These are a little bit longer term, going out in December. 5,100 of those this week. The big day for those, weirdly enough, was Monday. 3,000 of those on Monday, all opening. 1,000 on Wednesday. Only 600 today and 400 on Tuesday. So again, 5,100 of those, most of those going up on Monday. So intriguing how these spurts of liquidity find their way out here. If you're wondering if that weird put strip is still trading across all the months, the answer is yes. It is once again the 4 put, listeners, going up here from April all the way down to October here. Seems like that's where the 1,400 times this week, 1,445 each to be precise. So there is still some weird and or aberrant paper out here. Mr. Rhoads, what do you make of this near-term downturn in nat gas and the fact that it's kind of hard to find a size call print this week, sir?
It might just be a matter of all the bad. Everybody thinks all the bad news was completely priced in. I really found, that strip that you just talked about, the 1,445 of the 4 put in, pretty much everything from late spring to late autumn of next year. You got to assume that's a producer, hedging out their production and, maybe making sure that they can lock in a floor on the price. I don't know if they necessarily believe that's going to be, the outcome. But what's funny is after that, going farther out, there's like a bunch of prints in the 6 calls from January of 2024. Can't even believe I'm talking about that year. Through March of 2024, somebody bought 350 of the 6 strike calls over and over again. So it looks like, and then a bunch of the 10 calls going even farther out. A bunch of 100 lots in those prices. So it to me, I think maybe there's somebody that is very dependent on the price of natural gas staying at a certain level that is out there hedging themselves, and on both sides, those that are hurt by higher prices and those that will be hurt by lower prices. And you got to wonder why they're choosing this time frame right now to do something like that when there's so much uncertainty in the world, and definitely uncertainty around that market.
Interesting thing about those put strips is they have been trading for months now. It seems like they were on the 3 strike for a long time, and then they were doing 3,000 at a clip, and if not more. They've been moving around strikes a little bit, but that has been like clockwork for the better part of the last month and change out here in nat gas. Just huge time strips of puts across the board, and they're a little bit smaller size, but they're going a little bit meatier strike this week. They're going up to the 4 strike as opposed to the 3 strike. So intriguing stuff out here. Again, does make sense. It probably is a producer out there just hedging their bets literally across the board, across the full swath of expiration months out there next year. But you know what, listeners, we're coming up against, I want to make sure we get Mr. Rhoads to weigh in on your own equity thoughts out there. What are you folks thinking about these markets right now? Let's find out a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, I promised you a glimpse into what our audience is thinking right now in terms of the equity markets. And so our question of the week this week, listeners, and this is kind of a revisit of a question we did earlier this year. We've been tracking all of your results of various polls, and one of them was really interesting to us back in June. Remember, the first time the equity markets really sold off hard this year. We asked you at that time, what level were you folks thinking about buying back in? Where were you comfortable BTFDing, buying that dip? And over 40% of you back in June said you were waiting until the S&P dipped below 3750. That was the level for you where you were comfortable BTFDing. Now, obviously, we are below those levels, so we thought it was a good time to revisit that question. In fact, as we posted this earlier this week, we were at 3660. We are clearly below that now, 3630 out there in the S&P right now, listeners. So we thought we would revisit that, ask you that same question. Are you buying back in here now that we're below 37.5, or are you waiting for lower levels? Or the scariest one of the three, have you never got out? Have you been riding this all the way down? Mr. Rhoads, I'm curious for you. I think we know what your answer is because you are in right now. And then B, more importantly, what do you think our audience is voting for, sir?
I think everybody's waiting. That's what I mean, if you look at the market, there are not a whole lot of buyers in there right now. So I would assume that's how the crowd is voting. They're voting with their clicks, and they're voting with their lack of buying.
There you go. Voting with their dollars or lack thereof. Yeah. I suppose you can. You are right, sir. 64.9% saying they are waiting for lower level. I will say that has trended a little bit lower. We were north of 70 earlier in the week. So that has trended down a little bit. We've got 21.1%. They're joining the Russell Rhoads Club, saying they're back in. This is the level they've been waiting for. And then this one kind of alarms me. 14% right now saying they never got out. So they have just been riding the elevator up and then right back down. Again, hopefully, listeners, you've been listening to this network long enough. We know we have some new listeners. That could certainly be them. But hopefully we've informed and educated you enough to give you some tools to help mitigate the pain on the way down. There you go, listeners. At Options is the place to go to make your voice heard. You got about a day left in our question of the week. All right, everybody, that is going to do it for us here on TWIFO this week. Back again tomorrow, noon Central, 1 p.m. Eastern, for volatility views. Got our old buddy, Mr. John Smolin from MyAx, joining us there, so that should be fun. A guest for the Pro Q&As. Their schedule is all crazy this week, so we may end up having to move that to next week, in which case we'll give you double Pro Q&As next week. We'll get something sorted out. Stay tuned. Keep an eye on your email for how all that will sort out. Our producer is working diligently behind the scenes to herd all those cats so you folks can get all your Pro Q&As. In the meantime, Mr. Rhoads, if folks want to get at you, where should they go? What should they do?
Well, I'm at EQ Derivatives. You can always find me on the site. You send me emails if you got questions, and I everything that I write now is behind the paywall. So don't try to do that. But I pop up periodically, and when I do so, I say where I'm going to be on Twitter. So following me at Twitter is probably the best thing to do. It's my full name, Russell Rhoads. And I did want to point something out. You were talking about how cheap it is over in the UK. I looked up flights. You can get over there round trip from Chicago for less than $500 right now. Let's go shopping.
There you go. All that stimulus. I mean, they're giving away free money in the UK on top of it. Let's go. What are we doing here? We should be doing the show in London right now.
I thought the flight would be expensive because of the energy.
Yes, exactly.
This is honest. In all seriousness, this is the most difficult market to get a read on that I can recall, and I've been around a long time. If you're out there and you're struggling and you're like, what the heck? You're not alone. There's your virtual hug.
Yes, exactly. And this is a difficult one. Like we mentioned on the show, nothing.
It is.
None of the old relationships are working anymore. Nothing that you would expect. If you had told people at the start of this year all the different factors that we have going on right now, rampant inflation, all these other things, you would expect certain things to be happening in the market, and they are not happening. So these are indeed somewhat unprecedented times. So we all move forward with them together, somewhat cautiously, somewhat judiciously. We don't run in where the angels fear to tread there, listeners. Give him a follow over there on the old Twitter. I can account for it. He does tweet some fun stuff. Also, occasionally some storm chasing. We missed you on the storm chasing scene this week, Mr. Rowe. We could have used you down in Florida.
I know. My daughter, we chase tornadoes. We don't chase hurricanes.
Oh, okay. Probably smart. Kind of hard to get out of the way of those.
No, I brought that up. I said, you want to skip school for a couple days and head on down? And she was like, absolutely not. So.
You're smart. My family was right in the path of where it landed on the West Coast. There was some scary times there for a while last night.
Oh, my God.
No contact with anything for about a day. We were watching homes getting effectively washed away in areas just south of them in Fort Myers. So crazy times. Thankfully, they are all doing good. Minimal damage. They got very lucky. But, the notion of riding out a Cat 5 or near it hurricane, not a good one, listeners. Get the heck out of Dodge when these things are coming your way. And, of course, we got to get the heck out of Dodge with this show. You know where to go to learn more about all things TWIFO. CMEgroup.com/TWIFO is the place to go to learn more. And if you want to dig a little bit deeper into what the heck is up with small caps, I see our chat. They're intrigued by all things small caps. They want to start maybe dipping their toes out there. They want to do a little bit more research to begin your small cap journey. You know where to go. FTSERussell.com. Give them a follow on the old Twitters as well. Same thing. FTSE Russell. Again, all one word over there on Twitter. Going to like what you find. On behalf of Mr. Rhoads and indeed myself, I want to thank all of you out there for joining us out here on TWIFO this week. Back again tomorrow for Vol Views. I just got informed by my producers. Pro Q&A happening right after Vol Views. Got a fun guest. I won't let the cat out of the bag. Our producers will let you know who it is, but it will be fun. And then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.